One of the things that I talk to my clients about an awful lot is helping them understand that the lender really is their partner, really is their friend in this process.
If they'd always been behaving like this, perhaps we wouldn't be in as tough a times as we're having now. But the other side of it is when they look at a project, they look at it completely dispassionately. It's just a set of numbers to them. They really do want to get paid back. And so if a lender says that they want to go forward with the project, it's a blessing. Right. I mean, what they're telling you is that they're not going to take a chance, and they're not taking a chance with you. They believe that you're going to succeed. You are going to learn more about your business in this lending process than you would have ever realized that you would need to know. Because business really is a numbers game. Right. So, and they're going to force you to understand the numbers before you get started, instead of just flying by the seat of your pants and hoping you get it right by the time you get the doors open. With any client, they have to have the 5 criteria. They have to have good credit. They have to have the injection piece. They have to have enough money to put into the business. They have to have the collateral to secure the loan. That's an SBA requirement.
Right.
They have to have a secondary income besides the business. The SBA wants to know there's money coming into the house besides what they're relying on from the business. I mean, what if it takes a while for the business to get started?
Right.
What if there's a problem? The business doesn't ramp up as quickly as they expect it to.
As it relates to management experience, the clients, let's take the clients whose deal closed today. What kind of management experience did they have that you were able to write into the business plan to help the lender understand that they were born to own that kind of business?
And that's so important. I mean, they need to own the business, and the lender needs to understand that they're going to be successful on it. Now, these people that I worked with today, they had not actually owned this type of business in the past. In fact, they hadn't known any kind of business in the past. They had been managers in financial institutions. Of the 5 key criteria, the management experience is really the only subjective one. All the other 4, they're really numbers. They can be plugged into formulas and given weight depending upon a lender's experience. Right. If a lender is concerned about a particular industry, those numbers are going to be more important. If a lender has more comfort, then the numbers will be less important. It'll give them a chance to determine what the risk is for the lender.
And every lender has their own characteristic, don't they? They have their own hang-ups,
absolutely,
their own character, their own personality.
Right.
I know a few weeks ago I talked to a lender and the first question out of the banking development officer's mouth was, how's their credit? How's your client's credit? That was actually one of the first times in a very long time that I'd had a question come out as that being the first question. One of the key criteria that we talked about earlier is personal injection.
I'm pretty strict because while it can go from lender to lender as far as what they're willing to accept, and again, that's part of the puzzle. I mean, if the collateral is strong, if the secondary income is strong, then the injection isn't as important. But if I try to shoot it right at 30%, because if I have 30%, then I'm going to be able to cover any lender. Some lenders are going to look for 50%. If they want 50%, I'm not going to go there.
Right, we move on. I mentioned credit earlier. And credit's certainly important, don't get me wrong, right? I mean,
absolutely. It goes to character.
Exactly. It definitely speaks to character.
The collateral piece is more of a moving target. The actual SBA rule says that the loan has to be collateralized by assets if the assets are available. Now, that's to get the insurance, but a lender may still look at it and say, I'm not comfortable going forward without 100% collateral, or I am comfortable going forward without 100% collateral because the secondary income is strong, they have plenty of cash left over after the injection, they have some decent experience. So they're going to the lender's going to say, this is a project that we'd like to fund, that we'd like to go forward with.
Right.
I've had people go forward with collateral that is just cash, which is not necessarily the best thing. I prefer to set them up using real estate as the collateral because that piece is an asset that's not otherwise creating any income. It's just sitting there. It's just value.
Right.
As opposed to using cash or marketable securities, which you could use for other things. The real estate, you're not going to trade it, and especially in this market. The problem now is that a lot of real estate has lost value.
Sure.
So a lot of people have lost collateral as well, and we need to find other ways to solve that problem. Congratulations.
So congratulations today, Richard, on a job well done.
It's nice to get a financing done. It's a big job. It's a big challenge. It's a moving target. It was good to get those guys into business. They were very eager to get it started, so I'm glad we could help.
Absolutely. The process didn't take too long, did it?
Once we got everything taken care of, it took us about 60 days to get the funding, which is typical.
Going through this process of obtaining financing, writing the business plan, putting together the pro formas with our clients, I've just found that to be a very enlightening experience for the client going through that process, helping them understand where does that number come from for the very first month? What's the number that goes in that very first box? And it's really exciting. It's very exciting for me to help folks understand where that number comes from, be it a yogurt shop, a shoe store like Flip Flop Shops, be it a Von Foss like we're in today. Having an opportunity to talk to candidates about what their funding options are is a joy. It's what we enjoy doing, and we don't mind doing it.
Absolutely.
That is completely free of charge. It only takes us about a week. This way we don't have candidates who are calling us after having talked to lenders for 6 months and getting nowhere. Let's get it out on the table. Let's help them understand what their unique composition of net worth is, what kind of funding options are available for them. It might be an SBA loan, it might be an unsecured loan, a secured line of credit. There are a lot of different opportunities out there for financing in today's environment. Let's look at the big picture. And in that big picture, of course, are all the little components.
Sure.
But let's take a look at it and see. Don't be discouraged until we've had an opportunity to look at everything and be able to balance or see if there's that balance in the criteria.
It's a moving target. Financing, it can change from week to week, from day to day.
Right.
And it's really being able to develop a relationship with the lenders and understanding what they need and how to speak their language that's given us a chance to be as successful as we've become in helping people reach their goals. I mean, it's not about us, it's not about the banks, it's about getting the clients into the business.